Thanks, guys. That was all pretty good. The purpose of this exercise is to sort of give you an insight into my world every single day. I have great ideas. Sure. I have great ideas. And I have wacky ideas. And you guys all did a great job. So here comes the boring part. Let me give you a brief presentation. But first, anyone in here interested in becoming a venture capitalist? Anyone? 1, 2. Just 2 of you guys? 3? Does anyone here know what a venture capitalist does?
Or what venture capital is?
They fund great ideas.
Say again?
They fund great ideas.
Big guy, let's scream it.
They fund the great ideas.
Okay. Fun, great ideas. What about you, group?
So people bring them ideas, say, I want you to invest in me, and venture capital decides if it's worth investing in.
Okay. What do you think venture capitalists do?
Make money.
What do you think venture capitalists do?
They make money.
Okay. What do you think venture capitalists do?
They make lots of money.
Venture capitalists, we make money. We don't invest in ideas. What you'll hear in this presentation, which is kind of boring, is we invest in businesses. And we invest in people. With the idea to
Make money.
make money. So let's go over the boring part. We just put this together, sort of like that guy, hungover, it's the last minute thing. So I'm going to do some reading here. So don't want your eyes to glaze over or anything like that. But we're going to do this really quickly.
Well, feel free to ask questions within.
Yeah, absolutely. Let me figure this out here. By the way, when I went to business school, there was, we used transparencies. Anyone know what those are?
You are.
Yes, so we used transparency. So we made PowerPoint presentations, and then we print them out on transparency because we didn't have any of this stuff. And we put them on overheads. You guys have no idea what I'm talking about, right? Yeah. And then you would, yeah, it was amazing.
Yeah, just use the arrows.
There you go, winner. See me after. By the way, also, just to jump back, and that's how I am. My brain's sort of scatterbrained, so feel free to stop me. You guys just did an exercise that Harvard Business School students did. Okay, so their capstone entrepreneur class is a little bit more time. They give them a semester, and they come up with a business plan based on those office supplies. So, guys, you feel really proud of yourself. HBS, one of the finest business schools in the country, you guys probably blew them away. And I've seen them do that, and this was every bit as good. So, you guys feel really proud of yourself. Let's go to the first slide here. And I also have to blaze through these things. I work for Invest Nebraska. Invest Nebraska is a private nonprofit corporation, and we'll focus on this later, focusing on high growth companies in Nebraska and growing the state's economy. We advise and invest in companies and early stage business ideas, that's wrong, by the way, in Nebraska. As I said, we just put this together. We support and encourage angel investment, entrepreneurship in all areas of Nebraska, and provide networking opportunities for investors, entrepreneurs, service providers from all corners of the state. What does that mean? And why we are nonprofit? I just said we make money. The reason we're a nonprofit is because 75% of our investable capital comes from, I guess you guys don't have jobs, so I guess your parents' tax dollars. 75%. Okay? So to take that money, which we call limited partner money, we had to be a nonprofit. The other 25% comes from institutional investors looking to make money. For-profit VCs, they get their money or capital from high net worth individuals, which we'll go into, and institutional investors interested in this asset class. You got to remember, there's a tremendous amount of risk in this asset class. What we're investing in the paperclip company or the tack company, because there's so much risk, our LPs, even the state, but especially those people that are looking to make money, they're expecting a return, probably just from rough estimates, 10 times with that same capital if they invested in the stock market in a mutual fund. Give an example, they invested $100,000, 5 to 7 years from now, they expect me to hand them $1 million back. $1 million. Any of these ideas you think are $1 million ideas? I hear a lot of them, and in my mind, I'm calculating. I'm saying, hey, what a great presentation, seems like a useful product. Is it going to make money? Is it going to return 10 times my investment? Or should I just take the money and throw it in the market and expect that fine return, but not 10 times my money 5 to 7 years from now? So those are decisions Adam and I make every single day. Let's go to the next slide. This is on Invest Nebraska. We have 2 funds, the Innovation Fund and the Angel Sidecar Fund. And we can put in between 50 and 500K to each individual investment. Those are real dollars. Those are real checks that I write to these wonderful startup companies. Here's the caveat. We require a 1-to-1 match. I'll give you a little background here on the Innovation Fund. This is used for early stage companies, and it's focused on technology companies and bringing those technologies to market. This can be equity or debt. You guys understand the difference? It's a very simple concept. What we like to do is invest in something called preferred securities. Anyone? Preferred over common? You guys understand that concept? We'll get back to it. Very important. So when you guys go out and pitch your businesses, you're obviously going to want, and you're going to be shocked by what preferred security is. And we'll go back to that, and Adam, we'll make a note of that. The Angel Sidecar Fund. This is used not only for seed capital, but for working capital. Is that a term you guys understand as well? Working capital? Good, good. 101, this 101 match. It's a great thing and it's a bad thing for a guy like me because I'm looking to make money. Here's why it's good. It allows us to collaborate with individual investors, angel groups, and institutional funds. So we can form relationships, bring capital here to Nebraska. Let them know that there are smart guys like yourself, girls like yourself out there who have great ideas, but Silicon Valley, Austin, 128 in Boston, they don't know. So having this requirement which says, if we put $500,000 in, there's an entrepreneur or another individual that's also required to put the $500,000 in under the same terms, allows us to sort of branch out and spread the word. Here's the negative here. For guys like you, do you know any venture capitalists that are willing to write you a check for $500,000? No. This is where I come in. And I'll tell you a little bit about my background a little bit. I know a lot. I know a lot of guys. So, once we find a promising company here in this particular state, Invest Nebraska is able to shepherd them throughout that process and help them secure that matching 101 fund. What you'll also find is that, and when you guys go out and you sell your paperclip company, and she told us about who's the person that has the bale of hay idea? I know that's someone in the class here.
Oh,
That you as well?
yeah.
You have to make money with that idea? When you come out and you pitch that idea, you're not going to know exactly where to go. But once you get a commitment from us to say, listen, we're backing you. What's your name?
Shelby.
Shelby? Shelby, we're backing Shelby with real capital dollars behind her. She's able to take that money and go out to high net worth individuals or other institutional funds. So she's already convinced someone that's credible that say, I have $500,000. She's able to take that money and go to those people and say, I have a commitment from them, which makes the road much easier. You gotta remember, in this asset class, it's a herd mentality. Everyone runs behind capital. So if you have capital from a venture capital firm, I guarantee you, high net worth individuals from the state will back you to the hilt. And they'll match it on this one-to-one basis. Boring slide, but very, very important. Adam did this slide. From here, this is where we invest. From here to here. This is venture capital investing. from here to here. Up here, this is what a private equity firm does. You guys know the difference between private equity and venture capital? Anyone? Want to tell them that?
Venture capital is usually used in an earlier stage deal. A lot of times in like biotech and internets, and they're to start the company initially. Private equity is usually a company that's been in business for 10 years, has past financials that a brand new company just didn't have.
Absolutely. What we call this in the venture capital world is the valley of death. This is where companies go to die. All right? You guys are going to start businesses. I see people starting businesses. It's in one of these areas, boom, 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 is where they're going to fail. And when I mean fail, just out of business. You never hear from them again. Everyone's lost their money. What you'll see here is the sources of capital at these various stages. Some companies, as he mentioned, biotech or internet companies, need multiple rounds of capital. So they go through every single one of these. Some companies that are easy to understand, maybe your hay business, maybe you don't have to go through this. Maybe you don't have to go through this, but you certainly have to go through these three, right? So we'll definitely fund these type of businesses. Once again, the return that we expect in this asset class, venture capital, is 3 or 4 times our money. If I'm handing her a check for this business for $1 million, you guys can do the math. How much am I expecting back? 10 million, absolutely. Or, well, at a minimum. I want to go 3 or 4 times the market, but yes, at a low end, 3 or 4 times, but ideally, if I'm killing it and I'm worth the salt and I keep my job, $10 million back, and that's in 5 to 7 years. Does anyone know why I expect that type of money? That's ridiculous. If I loaned you, Adidas, $5, and I said, well, see you next Thursday, stroke me and hand me $50, you'd be like, are you crazy? Get out of here. You know why we do that? Anyone?
Because if their idea is really worth it, they'll actually be able to put it back.
Kind of. Anyone else?
The risk warrants it.
On the right path. The reason is that I expect 75% of the money that I put out, I'll never see that. I'll never see it again. I expect 75% of my portfolio companies to fail. So roughly, let's put it here. All of you guys on this side of the room, you're all gone 5 to 7 years from now. This is the only company that's alive. This one here. I've given you all money. This is the only one. So I can't expect $5 back. I need 50 to make up for all these losses. Or we don't make money. What is venture capital? You can read the slide. I'll read it to you. Financial capital provides early stage, high potential, high risk startup and growth companies. As he just said, in exchange for the high risk that venture capitalists assume by investing in smaller and less mature companies, private equity, venture capitalists usually get a degree of control over a company's decisions in addition to a portion of the company's ownership. What does this mean? Control over a company's decisions. We don't want to run companies. But if I'm investing in someone, I'm investing in, let's see, what was your idea? Laptop room.
Post-it note.
Post-it notes. I don't know anything about Post-it notes. I don't want to know anything about Post-it notes, but I do know things about management. So, while we have a level of control, is I don't want you running amok. I don't want you, for example, and this is a true story, and the professor told me you like true stories. I had a guy, and I was at another firm, and this one was fairly large back in the East Coast, so very venture capital-esque. And we invested $10 million into his manufacturing plant. And he was making polymer-cased ammunition, essentially plastic bullets. Okay. He wanted, the play here, he was going to sell this to the government. And they are cheaper to make than brass. We wrote him a check for $10 million. A week later, this gentleman was driving around in a Ferrari. It was a nice car. It was really nice. Control over a company's decisions. We don't want to run your company. But I don't want you guys to buy a Ferrari with my money. I can't have it. Something, because we're out to make money. Significant portion control of the company's ownership. What's significant? Well, that's all what you guys are able to negotiate. Venture capital is not a perfect science. And just like gamblers, anyone here go to the casinos? I'm new here, and I just discovered these casinos in Iowa, so I love them. Okay? And I actually have a job where I can have some disposable income. You guys probably don't go, but I go. Just like gamblers, we tend to remember all of our failures, not our successes. So I've been doing this 15 years. I've made a lot of capital. I've made a lot of money. But I remember my failures. Let me tell you four quick stories, actually. So bear with me for a second. When I first started in this business, young analyst just like Adam, my boss sat me down and he said, Mark, let me tell you two stories. Same stories I'm going to tell you. When I first started this firm, I had a guy come in here and pitch an idea. Your 2-minute idea. And he told me that he had a plan that he was going to, at this time, lease a fleet of planes and deliver packages and mail in one day for a low cost, all over the country for the same cost. My boss looked at the guy and he said, Mark, I couldn't believe it. It was a professional presentation, and it just didn't make sense to me. You got to remember, this guy, he's very much that investment banker, East Coast guy. So he threw the guy out of the office, literally. The team was FedEx. Not a perfect science. He had another guy come in the office. Two guys, they were not dressed in a suit and tie. They were sort of crunchy. You guys still use that term, sort of crunchy, with the Birkenstocks and the tie-dyes? Any idea what I'm talking about there? No idea what I'm talking about. Okay. Wow. Jeez. Hippie. These guys came into the office. They were retired school teachers, and they had an idea that they were going to buy a gas station in Vermont and make ice cream. My boss looked at him and said, well, you're not in a suit and tie. That doesn't make sense. You've never made ice cream. Those guys were Ben and Jerry. Threw him out of the office. That's what he does. He just throws people out of the office. Okay? Two great ideas. And the reason I tell these stories, and I'm going to get into my own personal stories as well, is that it's an imperfect science. And I don't care about your backstory. I don't care that your grandmother thinks it's a great idea. It's important. All I want to do is make money. And I'm going to make a lot of mistakes. So when you guys go to start your companies, there's going to be a lot of news. That doesn't necessarily mean that we know what we're doing, because all we're looking at is we're trying to make money. Two quick stories about myself. Anyone know the company Bag, Borrow, Steal? Anyone know that company? Bag, Borrow, and Steal. It is a company that was, I guess, 8 or 9 years ago. The business idea is that subscription-based model that women would rent handbags, jewelry, high-end things on a subscription basis, so you put your credit card in there online. For $100 a month, you can sort of, it's the Netflix for handbags. Okay, everyone knows what Netflix is. Sounds like a crazy idea, right? I'm not gonna I'm not gonna take this guy's wallet, put it in my pocket, and be like, okay, well, I'm done with it. Send it back in the company. I don't want this guy's wallet. I don't even listen to that money in it. Okay? So I passed on that. I've learned, threw him out of the office. That's what I've learned. You're out of here. So I want to make money. January of 2012, by the way, at that time, the company, it was worth about, I think it was $2 million, somewhere around there. Just got a venture investment on a valuation of $700 million. Yeah, on that idea. I still don't get it. And once again, I'm not really interested in sharing a wallet with someone. But okay, maybe I don't know. Ethos Water. Anyone know Ethos? What's Ethos Water? Good guy.
Isn't it like water where every bottle that you buy is like it sends water to Africa or something like that?
That's right. Ethos Water came into my office, wanted a minimal investment. I knew the guy Jonathan. I knew him from college and business school. He was looking for, he was selling chips, as we call it in the business, for $25,000. I called my buddy, because I want to make money, I called my buddy, Imperfect Science, and I said, well, listen, I don't know anything about water. I'm an investment journalist. My buddy was head of investment banking, food and beverage at Citibank. Called him up, and here's Ethos Water, they gave me the pitch. It's Jonathan, we all know him. Sent the business plan. He told me I'd be crazy to invest in that company. Are you insane? You're not going to make money. 12 months later, we know what happens. You go to your local Starbucks. What's the only water they sell?
Ethos.
Ethos. It's not a perfect science. Okay, we'll speed this up a little bit. How to secure venture capital. Venture capital should not be the first form of funding for any business. Don't come to my office when you haven't gone for a number of these other things. This is Adam put together this slide. Bootstrapping, very important. You guys know what bootstrapping is?
Bootstrapping is running your business with like a minimalist mentality. So you only spend money on what you absolutely have to spend money on. You wouldn't pay yourself. You're not going to go out and get an office. Casual business in a garage.
That's absolutely
in the
right.
basement.
In other words, it's run out of your parents' basement. Bootstrapping, very important. Friends and family round. Before you come to me, before you come to a venture capitalist, because that money's very expensive in terms of a cost of capital, and we might have time for that. The friends, family, and fools round is underrated. As I mentioned before, if you can't convince your grandmother to invest in it, how are you going to convince me to invest in it? Because they love you. They're your loved ones. All I care about is making money. Angels, they come next. These are former successful entrepreneurs in the industry. These are guys that have made a lot of money. So they understand what's a good idea, what's a bad idea, and they have the ability to write the check. You need to listen to their advice, especially if they've been in the same space before. Also, something else as well. Very important, when you have these established companies, get a corporate partner on your board or your business. It can be a great thing. It verifies the market for your business. I'll give you an example. I guess this is a poor example, but if you have a software business, and everyone knows, if Bill Gates is sitting on your board, it makes you a little bit more legitimate. It makes it more likely that venture capitalists will say, wow, he convinced Bill Gates to come on this board. Bill Gates to come on this board. This is definitely someplace I should be. Finding the right firm to extend venture capital. Each firm does different things. And we invest in different stages of that. Remember that big model that I showed you about seed, you had the growth and all that stuff. These are all important. So when you're pitching venture capital, you need to do your research on the type of venture capital firm. Geographic focus. If a guy comes to me from Nevada and he has a great idea, well, he didn't do his research. Because my capital, my checks can only go into businesses that are based in Nebraska. Industry focus. You start a biotech firm and you're pitching at an internet venture capital firm, there's no synergy there. Also, I wanted to mention as well, this is very important right here. This is what I mentioned before, that return, expensive money. Extremely expensive. Some VCs are very involved in their investment. Most want board seats. Some will recommend a new CEO or request that you move to a certain geographic area. So if a guy in Nevada wants my capital, I need him to come here to Nebraska. You also need to keep in mind when you're pitching VCs, are they solid money? Are they active? Are they a good strategic partner? Do they have access to a network? Will they support you? Will they help you with sales or a marketing plan? At Invest Nebraska, We're looking for businesses that want to add value to the state. That's our nonprofit mission. But we don't care about the sector. We see deals in social media, pharma, medical device, dental, internet, software as a service. We take a look at it all. Our returns are measured by IRR and exit. Once again, measurable numbers. But as I mentioned in that social part, we want money. Or we want to create an atmosphere where these companies that we invest in will be the economic engines of the state. It's my goal to make Invest Nebraska something called Silicon Prairie. Has anyone ever heard of that term, Silicon Prairie? Oh, you will. If I do my job, you will. You guys look that term up on the internet after this class, you'll find out that what you have now is a lot of VC shops, where I came from, out east or in Silicon Valley. They're all competing for the same good ideas. So they have a lot of money, and everyone's held on to that money going through the financial crisis. So if one good deal comes through, everyone is throwing money at it. What that means is those great ideas, they're competing. So we're all competing against each other, and it's just driving the price or up or the valuations up. So you entrepreneurs, you guys, have an advantage right now. That's what prompted me to come here. I have an advantage here because I'm one of the only VC guys in this particular state, in this particular region, in the Midwest. Let's go for it. How much time do we have? 25. Good. Self-explanatory. Need to prepare a business plan. Here's some of the things that I'm looking for here. You want to lead with an executive summary. Explain how your company should be competitive advantage. Show why you're going to win. Outline your target market, your service. Give us the data. We're going to look it up. But I want to know exactly where you're going to be competing. Very important. Demonstrate that you can execute on this plan. You're coming in and, I don't know, you're a fireman, but you're selling me a software idea? I throw you out of the office. You know why? Because I don't think you have the necessary management skills to execute on this plan. Show what you're going to use the money for. Don't put on there you're going to buy a Ferrari. I want to know where exactly my capital is going to go. Financial goals, the milestones. Your business plan should be at least 20 pages. I can't tell you the importance of a full business plan. Adam will let you, and Adam knows as well. We had a very valuable company. We thought it was providing a valuable service. We thought these guys could execute. We liked their financials. We didn't get a 20-page business plan. You know what we got? We got 4 pages of nonsense. What that tells me is that this guy doesn't have the ability to execute. He's not a strategic planner. So I can't judge whether he can execute a plan because I've never seen a plan. So while it felt good, I liked everything about this investment, I still can't do anything without a business plan. Very important. We focus on teams and we invest in individuals, not ideas. You don't have to have the best mousetrap, but I want to make sure, once again, you can build a mousetrap and make sure it's competitive in the marketplace and make money. Don't get bogged down as well with financial statements. I know they're all BS. So your projections where you're going to be as big as Facebook in 3 to 5 years, I know that's not true. Give me some realistic projections. I will work through it with you. I know they're all educated guesses. But I want to make sure there's some grounding and the way you project has a basis of reasoning. Ask for help. What we have a lot of coming out is, and what I see a lot is a lot of solutions for existing problems, or problems that do not exist. Any ideas what that means? Anyone? Don't fall asleep, guys. We're almost at the end. Let me give you an example of that without going in. Anyone know what the Segway is? Okay. Segway took on billions of dollars in venture capital. Dean, I know the guy. Have any of you seen Segways in the streets of Lincoln? All students have them. No. So he has a solution for a problem that doesn't exist. So there's billions of dollars wasted. presentation, you guys know. Get to the point. I haven't got to my point, so let's move on. Let's move quickly to this thing. You can read this slide. Focus, focus, focus. All of these things, extremely important. What's also important is the practice. You should have we call it the 10, 20, and 30 rule for investor PowerPoints. 10 slides, 20 minutes, 30-point font. If you can't explain your business in 10 slides, 20 minutes, and then 30-point font, I'm not going to listen. My attention span is probably less than you guys, and I'm falling asleep. The point of the presentation isn't about money. For example, in the case of social networking, I don't think anyone, smarter guys than me, have figured out how to monetize any kind of social networking thing. But the value and why it has billion-dollar valuations is because they're able to aggregate users. So that's what I'm looking for. I don't necessarily see you're going to make $1 million or $1 billion 3 to 5 years or 5 to 7 years from now. But what their value is a bunch of users. And that makes it important. That gives it value. Very quickly, we'll go through this thing. How do you value a company? This is what I bump up with entrepreneurs. If I like a business, and I think they're great, and I think all of those things, and I'm investing in the team, guy comes to me and says, well, I think my business is worth $100 million. And I jump out of it and I go, whoa. And I practically throw the guy in my office and I say, why do you think your business is worth $100 million? Oftentimes they don't know. They just don't get it. How many of you have taken finance class? Anyone? Quickly, how do you value a company? Throw them out. Anyone?
Projected cash flow.
Discounted cash flow. Anyone else? Public comparables. You look at companies that are traded publicly and compare them to your own. Anyone else? M&A comparables. You take a look at companies in your same sectors that are bought and sold. Other factors that affect valuation, and those are the three. Other factors that affect valuation: risk, stage of the company, management team, development of the product, any validation from customers. They all affect the value. But generally, those three are where you start as a basis. Exit. Here's some exits. What do you think is the most viable out of all of these? Any idea? What do you think most of these, what do you think I make my money? IPO, buyout, liquidation of assets, strategic sale, merger. Anyone? That's right. These are very rare. These are the ones that are publicized. Very, very rare. They often never happen. I've been doing this for 15 years. I haven't been involved with one, and I've put out millions and millions of dollars of capital. Never had an IPO. All my buddies in the field never had an IPO. So those are very, very rare. Usually it's a strategic sale. Guy wants to buy. You have a bigger company that sort of gobbles it up. Also, as I mentioned before, we're looking to sell these for huge numbers. So we invested $1 million. We're looking for a huge number. And the reason for that is, once again, all of you guys are all bankrupt. So at the end of the day, I have one company standing. That company right here. And that company has to sell for a purchase price to make up for all my losses. And that's the most difficult part of being a venture capitalist. So this one quickly. Due diligence. This is when we become a detective of the company, and a detective of you. It's going to be a long process, has multiple meetings, lots of emails. We do customer calls, we check references, we try to check out your co-investors. Here's a little fact that most venture capitalists will not tell you, and now you guys know the secret. This is all BS. This is all BS. We're never going to be comfortable with her hay business or the dueling piano business. Who has that? We're never going to know exactly how to run that business. You know where I spend my due diligence and every other venture capitalist spends their due diligence? looking at you. What have you done? How are you going to react in good and bad times? What's your personality like? What's your wife like? What's your husband like? That's what I want to invest in. I'm investing in you, not your idea. Quite frankly, I don't care, because all I care about is making money. So you can give me, and I'll take a look at all this stuff, how much you're going to make, who you're going to sell to, your financials, all of this stuff, but I'm investing in you, I'm really writing a check for $500,000 to you. Sell me on yourself. Let me just take a look at this. Oh, it's right there, Russ. Yeah, go ahead, Adam.
The only thing that's real relevant in this slide is that this deal, this is us. This is the one deal we've made in August. It's a company called Scan that I think it's in later on. And that was the only venture capital investment in those 3 months in the state. And that's why we're here.
Yeah, and you can see, come on, we can do better than Iowa. I've been to Iowa for the first time. Besides gambling, I went to deep Iowa. I mean, come on. This is why I'm here. Anyone from Iowa? All right, you guys think? All right. Kansas? Anyone from Kansas? Oklahoma? Here's our peers. We're lagging behind. Cumulative data. Once again, the various stages of venture capital, how much money went into it here in the United States. As you can see, this is big business. These are B's, by the way. Those aren't M's, those are B's. Lots of money floating around. Angel investor. This is the first stop you should, this is not the first. Before you get to me, friends and families first, here's what you should be focusing on. An angel investor, as you can see, is a high net worth individual. This is wrong. But usually has a net worth of $1 million, who invests directly in promising entrepreneurial companies in return for ownership. This is what we call an accredited investor. Accredited investor, that actual term, is defined by the SEC under Regulation D. What that means is that I'm not this guy. I'm not a high net worth individual. You guys aren't that. I can't directly sell you shares unless you meet the criteria under the SEC. That being said, there are friends and family rounds. There's not supposed to be friends and family rounds, but there are friends and family rounds. So between you and I, don't let it leave this room, that's who you should be focusing on first. You can see there's a ton of these guys here. I'm very involved with a group called the Nebraska Angels, and we meet once a month to discuss investments into small businesses. I work with these guys almost daily. You know why? Because they're out to make money, and I need that one-on-one match. But there's all kinds of people all over the country that do this type of investing. The reason they have this criteria, and the reason they have the term angel investors, is the level of sophistication involved with this. So if you're an individual and you're writing that check for $1 million, they want to make sure, the SEC wants to make sure you actually understand what's going on here. And more importantly, you can absorb the loss. Here's some of our portfolio companies. This was Adam's $1.25 million deal. You'll see here, sector agnostic. They're very, very diverse. I don't know anything about any of these companies when I invested in them, but once again, I invested in the people. People. We're at the end of this thing. Any questions?
Several. Touching on the last slide.
You only get one, by the way. Go ahead.
All right. If someone comes up to you, let's say a working engineer that has like a new material for like space age, aerospace, engine casings or something, I mean, something you have literally no idea.
Yep.
Do you have consultants? Do you have people?
We do. We do. We hire outside consultants. Absolutely. I want to be brought up to make sure this guy's not just a coop job. Okay? And we have a lot of those guys coming in. But absolutely, there is something to be said for doing due diligence, and things I don't know about, we hire outside consultants and we pay them, and that's just part of the due diligence process. But I wanted to stress to you that if that guy comes to me Me, I'm putting 75 to 80% of my due diligence on him. Anyone else?
Are VCs working for nonprofits compensated similarly to for-profits?
Yes and no, okay? Here's what typically happens in terms of, and we'll talk about a senior level guy like me, a managing director. And let me go into how I got in there first to answer your question. How many people here said they want to be venture capital? I know you. How many people here want to start their own companies? I assume that's why you're in this class. How many people want to be investment bankers? It's probably the only one that knows what an investment banker does. How many want to be management consultants? Not sure really what a management consultant does. All of those avenues that I just threw out there are all paths to being a venture capitalist. Okay? How I got into the business. Got an MBA and didn't really know what to do. Didn't know what investment banking was, didn't know any of that stuff. And became a management consultant. Typical what MBA people do out east. Travel 5 days a week, go to different companies, solve their problems, like I can solve a Hughes Corporation's problems in 1 week, and then fly to the next company. Did that for a while and had an entrepreneurial bug just like you guys, and I started a company. The company's called World Development Group, and it was a financial service company focusing on the emerging markets. Essentially, I started an investment bank. Went out, raised capital with a couple of partners of mine, and sold that company to Bank of America. Great. Young guy, older than you guys, 27, 28. Pocket full of money, I'm just happy. What do I do? What do I do with the next of my life? Well, Bank of America had different ideas. They said, hey Mark, you need to come work for us. Because that's part of your contract and that's how you're going to receive your money. Okay? Tons of Bank of America stock. Okay? Did that, became an investment banker. Hated it. It was the hardest job I've ever had in my life. You'll ask other investment bankers, what do they want to do? Private equity and venture capital. There came a time where the guys that I pitched previously, when I was going up making these pitches, they said, hey Mark, we still remember you. Hey, you ever think about, and I'm a banker at this time, you ever think about coming on the other side of the table? And I said, absolutely. Where do I sign up? Where's my office? They said, no. You're an analyst. I'm an analyst. So I started a company. I've sold that company. I was an investment banker doing multi-billion-dollar deals. This asset class I started in as an analyst. That's the bottom of the rung. Venture capital firms look like this, and Adam can tell you. There's a bunch of fat cat partners, and then there's very few support staff. Okay? So it's extremely hard to get in. And the reason for that is, going to what he said, how we get paid. We get paid on exits. Okay? And this is exactly how it works whether you're here or at Mitt Romney's Bain Capital. There's an 80-20 split. What does that mean? When there's an exit, 80% of that capital goes to the people who invested the money. 80%. It can't be 79, it's not 81, it's always 80%. I don't know why. 20% goes to these fat cats up top. If you're an analyst, like Adam is, okay, the senior partners, I don't care how well you do, and this is a little career advice, so this is not to discourage anyone, but if I am splitting that 20% with my 4 partners, why would I split it with you or you? Why would I let you come in? Why would I want to split it 5 ways when I can keep my 25%? So that's how they get paid. You get a salary, but more importantly, that's nothing. How these rich guys that I mentioned before, they're able to buy baseball teams and football teams. That 20% is significant. Imagine if you're the original guy that invested in, and this is one we would all know, Facebook, and it's multi-billion-dollar valuation. You get 20% of that. you're doing all right. I'm sitting on an island somewhere. If I'm that guy, okay? So that's how you get paid. So you get a salary, but your capital is at risk. You get enough to survive, but the real money is made on that 80-20 split. So it's really something where it's your own performance. So if you stink as a venture capitalist, you're not going to make any money. And this is once again about making money. Does that answer your question? 80-20 split. Anyone else?
The sums you guys are talking about in the life cycle stage of the venture process,
Yeah.
what stops a would-be entrepreneur from just getting a much cheaper conventional loan for sub $500,000?
A loan?
Yeah.
Here's what happens. We are the bank of last resort. Okay? So I would encourage you guys, don't come to us first. You go to a bank, see what they say. They're gonna once again, they're gonna throw you out of the office. You guys don't, these ideas don't, loan are either two way. It's cash flow based. So I'm loaning you, if I'm a bank, I'm loaning you money based on your ability to repay. Okay? So that's cash flow. You're a startup, you don't have cash flow. You just have you have an idea, you might have a prototype, you might have a working model, but you don't have cash flow. You can't say, well, 5 years, look how much money I've made. The anticipation is going forward, I'll be able to amortize this debt for the next 5 years, because you don't have any cash, right? You're at zero, or you're at 100,000, or even if you're at $1 million, you don't meet bank criteria. Okay? So that's why you don't go to a bank, because they're not gonna approve that loan. Or asset-based loans. Sure, I'll give you a loan. Let me tally up all your assets and see what they come to. Say if they're $1 million. I don't give you the $1 million. I give you the liquidation value, which is usually probably 40%. That's why you don't go to banks. Also, answer your question, and I think this is important because you guys are seniors. And this is just my personal advice, and you can take it or not take it. These jobs, as I tell Adam, are dominated. Unless you're a guy that goes in, this is a good question, Adam, unless you're a guy or a girl that goes out and kills it, the reality is coming from UNL, you're at a disadvantage. You're at a disadvantage. I didn't go to Harvard, I didn't go to Wharton, I didn't go to any of those schools. I was at a disadvantage as well. So your job and how you're going to get these VC jobs or investment banking jobs or if you want to start your own company, venture capital jobs, is to totally commit and sacrifice a little bit. So if you guys all want to come out, and who are the people that want to be, you want to be an investment banker, that guy right there. Maybe your first stop is not New York City. Maybe your first stop is Dallas. Get the investment banking experience. Then go to New York City. Then you're able to compete with these guys, as I mentioned, and you guys can compete, coming out of Harvard Business School. That's the career path. That's the career path that I've told him to take. That's the career path I took. Salaries. Is that what you guys want to know? You guys want to make money, right? You guys interested in those kind of stuff? Okay. Let's do, and I'm new here, so let's do New York City. Expensive place to live, right? We all agree. Exciting, expensive. Studios are $2,000 for 400 square feet. As an analyst, first coming out of college, you can expect to make about $100,000. That's a lot of money. It's not so much money living in New York City. That's your first step. That's the first rung. Your second step, and this is every private equity, venture capital firm, investment bank. And I'm sorry, I can't really, you're an entrepreneur, go for it, you make your own, hit it big, fail, that kind of thing. But this is strictly financial service companies. An associate, you'll probably come in with bonus about 120. That's a lot of money. Not in New York City. VP, probably about $150,000 with your bonus. Then you get to the big money. Oh, we like the big money. Principal level, probably $400,000, $500,000 if you're at a, I'd say 500, anything we'll make it easy for you. Anything higher than $500 million on the capital, you're probably making $500,000. That's a lot of money. You take that, would you take that? Yeah, I take that now, that's great. Managing director, which is your next step, these guys make millions. They buy baseball teams. And when I mean millions, millions. They're Mitt Romney, who hasn't done private equity in 20 years, but still makes $20 million a year. So it's a lucrative field, but that makes it extremely competitive. You'd have an easier time, and once again, I'm a sports fan. So you'd have an easier time being on a track for a general manager of, and I'm from Boston, for the Red Sox. You know, so being like the analyst on the GM team, then getting it, or that sports team, then getting into venture capital. And the reason for that is, this is my personal opinion, all of those jobs are from Stanford guys and Harvard guys. And you know what? They keep hiring themselves. They hire themselves. So I want you guys to be able to stand out. How do you stand out? You do what Adam did. He volunteered for years. He made himself part of this entrepreneurial community. He didn't go to Harvard, he didn't go to Stanford, but he volunteered. He found out the people that he should know. He got his foot in the door, working for me for free. And then when an opening came up, I said, sure, Adam, I already know your work. Yeah, I could bet on a Harvard guy, I can bet on a Wharton guy, I can bet on a Chicago guy, but I already know his work. So there was a little sacrifice there. So for all you guys that want to get into private equity, it's going to be difficult, but it's important that you make that sacrifice, and it's important to know that you're going to. I had a successful exit. I thought I was a pretty big deal. I started at the bottom. Any other questions before we go? All right, beat it.
Nope.
Oh, not yet. Okay, sorry.
Yes, thank them for this presentation. It did have a lot of detail to it that, again, it did reinforce the information that was in the textbooks, as well as gave them stories that they can tell. So I think that in itself is
I hope so.
well worth it. And I always have...
There's nothing academic about it. Sorry, guys.
I give my speakers pay of $1 million, which I'm sure that typically you don't get $1 million for speaking. But if they take the information that you gave them and really put it to work, they're worth lots of millions of dollars.
Absolutely.
I feel like, and I do feel like you complimented them for the fact that we are in Nebraska, which to a lot of people is no big deal, but there is a lot happening here, and they have a lot to offer.
Absolutely. This was, I mean, you guys did a great job on the pitch. As I said, better than I've seen it at Harvard Business School. Better than I've seen at Darden, which is University of Virginia, which is supposedly a smart school, but it's a great.
I was really impressed with you guys.
Yeah, it was
So,
great.
Good
Good
job.
job. Oh yeah, guys. For you, yeah, Mark at Invest Nebraska, interns. Mark at Invest Nebraska. Actually, hold on.
They're looking for interns.
Yeah. Dan, actually, send it to my CEO. Dan at Invest Nebraska. You guys are interns. Dan at Invest Nebraska. Resumes.
Okay, so possibilities for jobs. All right.
And as I said, he was an intern. So.
Okay, and a little housekeeping. I put in Blackboard what was happening this week, and I think I forgot to click the box to email it to you. So if you haven't been on Blackboard, you probably didn't know what was going on this week. But we do have a test on Thursday, but I don't want to see you. I just want you to take it online, at home, or someplace, but just make sure you have a good connection. But go to Blackboard, because it does give you some information. But that test is on Thursday, like I said, but you don't have to come to class to take it.
When is that test available?
It'll be during this class time, okay? 75 minutes is how much time there is for class. So instead of coming to class, you'll just take the test. Yes.
So we have to start right at 11 to get the lesson.
Well, when you started, you've got 75 minutes, but I set it up so that it will be during this class time. So it'll shut you off after 75 minutes, for sure. But you do want to start taking it right away. Okay? All right. I'll send that email out to you again, but Blackboard.